What if I told you that Ben Bernanke was doing his best to get you to buy one of or some of the worst run companies in America? What if I told you that? I mean, this is a guy who's really been put in charge of protecting the net worth of the United States. And the net worth of any country is the currency. Though it's clear that he's not wanting to protect the currency because he wants to create more and more inflation. This is with gas being up 30% in 2 years, 11% alone in the last 12 months. Food's up over 6%. Imports are up over 8%. Oil's over $100. So he doesn't seem to see inflation. I just read that Mars, the chocolate bar company, is decreasing the size of their candy bars by 11%. They're saying it for health reasons, right? But really they're shrinking the size of their bars because of inflation. You buy something with the same dollar and you get 11% less. That's an 11% inflation rate. So inflation's all around, but Bernanke does not see it. So clearly the guy that has been put in charge of this country's net worth is up to something different. And I want to show you what he's up to. Now on the screen here is a price chart of TLT. TLT is an exchange traded fund that buys long-dated U.S. Treasuries, 20 plus years and longer. When you see this price go up on this price chart, the more it goes up, the poorer people are getting in this country. Really. Because what this price chart is showing you is when this price goes up, people are getting paid less and less on their bonds and on their savings. And he is sacrificing retirees and savers and even people investing for their future so he can get his 2% inflation or 3% inflation. Now, look at what's crazy about this. This is a price of TLT. Look back here at the end of 2008 when the world was melting down. It was at about 125. We're at about 116 now, but it's stubbornly staying higher. Bernanke wants this to go even higher. He wants 30-year rates to be 2%. That's what they are in Japan. A 10-year rate to be 1%. And every time he does that, people get poorer for two reasons. One, they earn nothing or much less on their bonds. Because look, if you're getting 3% on your bond and inflation somewhere between 4 and 10%, then that's either a -1, right? Or a -7% return. That's real loss of purchasing power. People are getting poor, and that's why they're getting poor. And this is showing that. He wants this to go up. He wants it to stay up. He wants it to go up higher. So what's great is you can actually watch this and see how bad things are getting, because the higher it goes, the worse things get for this country. Now, what he also wants you to do is he wants you to see this and go, oh my gosh, I'm not getting any money in my savings. I'm not getting any money in bonds. I have to do something risky with my money, or riskier with my money. And so what he wants you to do is buy companies like Bank of America. Now, has he specifically come out and said, buy Bank of America? Of course not. But this is one of the worst run companies in this country. And the more this goes up, I think the worse things are, because the more this price of this stock goes up, the more unstable this country gets, and the more people are going to get hurt, because people are going to be falsely prodded or taunted or nudged into these high-risk stocks, not really knowing what's going to happen to them, and then all of a sudden this thing's going to drop out of the bed or drop off a cliff like it did back in July and August of last year, and they're going to be caught short again, and they're going to lose capital again on top of losing purchasing power. So he's doing this. He's creating that. He's doing that through his money printing and these swaps. They're now called swaps. I'm going to swap some money with the European Central Bank. It's all money printing. So what can you do? One, notice that he's doing this. Notice that he is dead set on driving rates down even more. He is dead set on wanting people to move into riskier assets. I consider Bank of America a very risky asset. But what you can do is, if you're going to move into stocks, which one of my portfolios that I show, teach, and use is Obvious Trend, and that buys individual stocks. Now, what we're buying is high-yielding, blue-chip, dividend-producing stocks that are very, very well run. So if you look at their balance sheet, you know what they're doing. You know how they're making their money. Altria is an example of a stock that we own. I'll just quickly pull it up here. Altria Group used to be Philip Morris, got split in half. There's one part Philip Morris, one part Altria. This thing is going straight up. It's paying 5.5% dividend yield. Now, this is where people are getting into and staying into. If you want to get into the stock market, stocks like this are the way you want to play that. And I've gotten my clients into this a long time ago. So not only are they getting that 5.5% dividend yield, but they're getting the capital appreciation. So the takeaway is, the rule is not to fight the Fed, which I don't think you should. But I want you to see what he's doing to rates. He's driving them down. He's driving people into risky assets. The way to avoid that is to find these blue chip, clean balance sheet, very obvious and clear what they do businesses, and add that to your portfolio among looking at the other strategies that you want to have. That's it for now. Thanks so much for listening. This is RC Peck. I will speak with you soon. Okay, take care.